Hi everybody, it's Brandon with Freedom Wealth again. So whether I'm writing or I'm producing videos, I like to talk about things that I've personally done in my financial life. And today I want to talk to you about dividend investing. So what is dividend investing? Dividend investing is when you purchase a collection of individual stocks that pay dividends to you. I guess first what I should tell you is what a dividend is. So a dividend is a cash disbursement from a company to its shareholders. Usually it's on a quarterly basis, and the dividend is completely voluntary, so the company could decide to cut it at any time. And because of that, when you're looking for dividend paying stocks, a great place to start is the dividend aristocrats, because to become a dividend aristocrat, a company has to not only pay but also increase its dividend for at least 25 straight years without interruption. A lot of those companies on the dividend aristocrat list are sold at a premium because they do have the stature of being a dividend aristocrat, so that is priced into their stocks. But occasionally you can find a dividend aristocrat that has fallen on hard times and you can get a bargain deal. Actually, recently this year I did that with both Target and AT&T. So I've given you the dividend aristocrats, but what other metrics should you look at when you're trying to decide if a company makes a strong dividend portfolio investment? One thing you want from a dividend company is to have their dividend take no more than 70% of the EPS. What EPS stands for is earnings per share. And by not taking more than 70% of that earnings per share in dividend disbursements, it means that one, the dividend is safe because it's covered by earnings and they won't have to dip into their retained earnings to be paying it. And by only taking 70%, it means there's still room for growth. So I've given you some tips on how to find different dividend investments. But what do you do with them once you have them? And for me, dividend investing is a very long-term play. So when I buy dividend stock, my intent is to hold it forever. And because I do intend to hold it forever, what I do is I set up DRIPs, or dividend reinvestment plans. You can do this with your brokerage company. It's really simple. It's just a few buttons. And what it will do is every time a dividend is paid, it will automatically reinvest into more shares of that stock. The nice thing about dividend reinvestment plans is some of them give you a discounted rate up to about 2% of the stock price, and all of them allow you to buy less than whole shares, which you wouldn't be able to do if you were just purchasing stock by yourself, as well as it makes the purchase commission free, saving you anywhere between $5 and $20 per trade. Fees are a big thing that can't be ignored, and that's why commission-free trading is huge with dividend reinvestment plans. Another thing that dripping does is that it offers you a dollar cost averaging strategy without doing anything. So when the stock price is higher, your dividends will buy fewer shares. When the stock price is lower, your dividend will be able to buy more shares, thus buying more shares at an attractive price and fewer shares at a less attractive price, which is dollar cost averaging. So building a dividend portfolio is great, but you have to be smart about it. While you can choose individual stocks for your dividend portfolio, I recommend never having more than 30% of your portfolio in individual stocks, whether they be dividends or non-dividends, never more than 30%. The other 70% should be in index funds or ETFs. Yes, it can be fun to try to beat the market, pick your own stocks, but realistically, beating the market over a prolonged period of time isn't realistic for most people. So hedge your bets and purchase ETFs and index funds. What's great about dividend investing, though, is it provides you income in retirement without having to sell your assets. So the recommendation is to take 4% of your net assets every year in retirement. But with dividends, you can not sell any of your stock and still bring in income, because they give you that quarterly or monthly disbursement, which you can use to live off of instead of selling off the stocks. So that's my talk on dividend investing. I use it because I have a long-term approach, and I hope to retire early, and this is one of the ways I plan to generate income in retirement. But it's not the only way, and I'll be creating more videos on different tactics I'll be using to generate income both during my working life and in retirement. Talk to you guys soon.